Hello, everyone, and welcome back to another episode. My name is Jordan. I'm a millennial investor, and today we're going over Berkshire Hathaway, and more specifically, a more recent event that just happened based off of this CNBC article. It says Warren Buffett gets permission to buy up to half of Occidental Petroleum, boosting the shares, and it went up about 10% off the back of this news. Now, we're going to go over in this video a bunch of different things with Berkshire, with Occidental. We're going to look at the holdings. We're going to talk about what they're doing moving forward, the reasons why we think they may have bottomed, and what this company has looked like in terms of its utility towards crude oil and natural gas. We're going to talk about crude oil in general, talk about where I think the price of the overall commodity is going in the future, as well as things like storage rates, and lots of other fun stuff like that. So if you want to see what Warren Buffett's doing now, what I think he's going to do with this deal, it's all just prediction. I can't tell the future, of course, but I'm going to be giving my opinion on this deal, whether or not I think it's good or bad or anything in between moving forward. If you haven't seen me before, my name is Jordan. I'm a millennial investor, and I have been investing in dividend growth companies and growth companies since about 2019 for the last 3 or 4 years now. Now, in this dividend growth portfolio, I don't have any oil companies at the time. I'm not really very bullish on crude oil or really just energy companies in general. But really, I plan to go over in this video and give a clean, unbiased view of the company and what I think Warren Buffett's doing with it. If you want to support me and the channel, if you still like this type of content, if you subscribe to the channel, feel free to check out M1 Finance, where you can get $10 for signing up for their service, and we'll help support the channel using that link. And also, you can check out other things down below in the description, as well as Jota savings accounts, credit card referrals, and all that other types of good stuff. But thank you guys so much for watching. I appreciate you tuning in, and let's go ahead and jump straight into the video. So Warren Buffett gets the okay to buy half, not 10%, not 15%, 50% of Occidental Petroleum. Now, if you want to go back here, if you don't know what Berkshire Hathaway is, the way I like to describe it is that Berkshire is a company that owns companies. They don't really do one thing. They do a million different things, okay? And now this chart isn't updated. This is a little bit older, but the percentages don't really matter. This is just to give you an idea of what the company actually does. They own anything from GM to Amazon to MasterCard to Bank of America to JP Morgan Chase to Kraft Heinz to Apple. They own a little bit of everything, and they wholly own lots of individual businesses like Fruit of the Loom and Geico and lots of other names like that. But overall, this company is a company that owns companies. Okay, now, if we look at their most recent 13F that they just filed about a week or so ago, they have many different companies, and this is in order from their top to smallest holding. And in fourth place, you have another energy company, which is CVX or Chevron. And then in sixth place, you have OXY, which is Occidental Petroleum, who we're talking about in today's video. Now, they currently have a massive stake of about $21 billion as of 16 billion, looking at the wrong category, 16 billion as of June 30th, as of the end of that business day. Who knows if they bought more since then, but as of this most recent filing, that's what they had. Now, if we look at this article here, it said that Buffett first invested in Occidental Petroleum in 2019 when the oil company was in a bidding war with Chevron. To buy its crosstown Houston rifle Anadarko, Occidental CEO Vicky flew to Omaha, Nebraska, one of company's Gulfstream V, and convinced Buffett to add $10 billion to her war chest. It was enough to swing the deal, and Chevron pulled out soon after. In exchange, Buffett got preferred shares, yielding 8% annually, plus warrants to buy common stock at $59.62, which, by the way, as of today, hopping over to Qualtrim and typing in OXY, as of the most recent close, the company closed at about $71. So he's already in the green on those warrants. If he were to execute it, that's about a 12% gain, or excuse me, 20% gain or so. But that's not really what he's for. I think he mostly bought it for this 8% plus preferred shares, if I were to guess, to be honest. Now, I think that this is important. Buffett, if you want to look back here, if we want to go to Berkshire, if we go to BRK, okay, and we look at this company's free cash flow, this company has a massive record of putting up insane numbers of free cash flow. Every single quarter, putting up around $26 billion every single quarter. Or excuse me, every single year, I meant to say. Every single quarter, they're putting up around, I know lately it's been down a little bit due to the market downturn, but generally this company has put up anywhere from around 7 to 8 billion, and even most recently putting up around 4 or 5. But billions of dollars every single quarter, every single month, putting up $1 billion of free cash flow and profitability. That's not the only thing we should look at. Let's hop over to the quarterly chart and pull up the cash and debt and just look at their cash pile. As of the most recent quarter, they still had $101 billion of cash on the balance sheet. Now let's remember that number, 101 billion, and go over to Occidental Petroleum and see what its market cap is. This entire company's value is 60 billion, and Warren Buffett already owns part of it. You can see right here on this highlighted section. The company's about 60 billion, so to buy out half of it, they need about 30, not counting the shares that they already own, which they already have a pretty significant stake in. Now, the reason why I bring up free cash flow and the amount of cash that they have is important because right here on this paragraph it says that Occidental is not only one of the biggest producers of the Permian Basin, the largest U.S. oil field, but it's also one of the lowest costs with an oil price of just $40 a barrel needed to sustain its dividend, which right now we're currently trading at about 90. So Berkshire is a person who loves free cash flow, who loves dividends, loves profits. And so if Occidental Petroleum has crude oil anywhere that's around $40 or higher, they can easily sustain that dividend, if not raise it in the future over time, especially if oil prices are higher. So I think that's what's important here. When you look at this free cash flow, if they were to buy out Occidental Petroleum, it would likely increase this more and more from the dividends that they would receive from their investment. Now, in terms of crude oil, it's kind of shocking to see, because as of late, crude oil has been struggling a bit. You see that we did hit a peak at around 120, 125, and today we're sitting at about 90. Now, where do I think it's moving forward? I don't know. It's just a prediction, but based off of this, you can see where we're at in terms of inventories, currently at 886 versus last year's 1,000. So we're down about 16% versus last year. So storages are down. The supply is a little bit different, but the production is coming up pretty significantly. Production of natural gas is up about 11% year over year, and crude oil up about 7%. So while supply may be a little bit low, we are producing more than we were last year, and I would honestly expect this to go up. Now, that said, you can see that inventories are down a pretty decent amount, 16%. But is that enough to warrant this massive uproar? If we go to where we were just, like a year or so ago, let's go back to August of last year. August of last year, these same contracts were going for about 60, 70 bucks. And today we're at 90. And I think that over time, as this production increases more and more, and the supply goes up higher and higher, going from 886 to 900 to 950, I think that overall we're having some downward pressure on crude oil, and I wouldn't be surprised to see crude oil go back down to 85, 80, 75, 70. But regardless, I think Warren Buffett is really focused on the long term of this company. As I said, he owns stakes in many, many, many different businesses. But while I'm not a big fan of crude oil, and I'm not really thinking that this one is going to be a big booming stock over the next couple of years, that said, it is a company that has a history of producing free cash flow. And if you look over the last several quarters, going back through the last year or so, $2.5 billion, $2.3 billion, $2.4 billion, last quarter, $4.35 billion of free cash flow. And to think that Warren Buffett could buy this stock relatively easy for what considered to him to be chump change, I think that would really help out their free cash flow numbers, probably get it over that $30 billion every year mark, and it could help just bring more value to the shareholders. And not to mention, Buffett's been buying back shares lately very heavily. Looking over the last several quarters, these have started to go down pretty significantly, buying up a significant amount of shares. So if they're going to continue to do that, that could provide even more value to shareholders, once again just repeating that virtuous cycle. Thank you guys so much for watching. I appreciate you watching all the way to the end. If you found this video helpful, feel free to subscribe down below and check out all the other stuff down below in the description, including auto savings accounts, credit card referrals, and then of course signing up to M1 Finance, which 124 people have done so far. Thank you guys so much for watching, and I'll catch you guys next time.